because we're happy. All right, very good. We're off and running. Because it's a two-way street. There's we like to do these every week because there's always something new. There's always new stock, and pretty much there's always been good news as well. I've had the same heading on this email blast going out for maybe I don't know, 2 or 3 months, however long. Jasmine's had the same boring headline going out, but the people still don't understand that I'm not allowed to lie, and that everything I've been telling people for 4 years is the whole truth and nothing but the truth. And people are making a fortune, and the proof is very easy to find. So I've still had people saying, oh, it's bullshit that you get paid 9 times the rent. So in the last 3 minutes while I was waiting for you guys to come along, I zipped off to realestate.com.au, and I'll share that in a second. Let's have a look. So I'm just going to share the screen. Hang on. And actually, Lawrence, you can tell me if you can see the screen okay. That's real estate.
Oh, yeah, yes.
Sorry?
Yes, I can see it. Yes, I can see it. Yes.
All right. So that means everybody else can as well. So what we've got is, let's have a look. If we look at Ballarat, which is one of the hottest investment areas, it's been that way for a couple of years. And we look at what's selling in Ballarat, and I just organised it from the highest selling price down to the cheapest. Lawrence, can you see a $610,000, $650,000 house?
Yes, I see that. Yes.
All right. So that's what's for sale. So the most expensive thing, a bit over $600,000 for your typical everyday investment properties, which would be right. And then there's plenty of them in the $500,000 mark. So they've had a big jump, and these days they're not going anywhere. All right, they're not going up in value. Interest rates have killed that. Boom. Even if people wanted to buy these things, you know, the bank adding their margins, adding their buffer of a couple of percent means they're doing the calculations based on about 9%. And, you know, the rental returns would be lucky to be 5% these days or thereabouts. So it's costing people money out of their pocket. So investment properties just are not selling. And as Lawrence pointed out last time, I think there's about 70-80% of every property getting sold is an investment property, because it's just been such a drain on people's flow. And tenants have so many rights these days. You know, they can have their cat, you know, wee all over your house and you can't do anything about it at all. Plenty of other horror stories. Yeah, we're spending maybe $600,000 at the most. And if we have a look at the rent that we're getting, that's why I put the most expensive house there at $650, because the most expensive rent that we can get around Ballarat's about $650 a week. But the average, the vast majority of it is under $500 a week. Flip through all that. So $500 a week. And then we look at how many of these investment properties are available. So we've actually got 154 typical everyday investment properties for sale, cost around just under the $600,000 mark. So then if I go and have a look at what we can do with an NDIS property, let me have a look in the same area. And let me share the screen, because we have flipped over to Adobe Acrobat. All right, can everybody, Lawrence, can you see the NDIS SDA?
Yes, I can see that.
All right,
yeah, so, SDA robust, fixed 818, 500.
So we're paying a couple $100,000 more, but it's actually easier to get this loan than a normal everyday investment property loan, because this property, now this is also in the same suburb, all right, comes with a lease, it comes with guaranteed rent, and it comes expected rent of over $5,000 a week. So if we've got the average rent in Bonshore of an investment property $500 a week, compared this one over $5,000 a week, we're getting 10 times the return. We're paying about 30% more. So 1,000 times return for 30% more is a pretty good investment. Then, of course, you look at how many of these things are available. What's the vacancy rate? There are 0 of these houses available, as opposed to 154. The rent is more than 9 times the standard rent of a normal everyday investment property. So we can understand why NDIS is quite popular. Now, this property is...
Can I ask where Bonshore is?
It's Ballarat.
Whereabouts is Bonshore? Ballarat region.
I mentioned Ballarat because Ballarat's one of the most popular places to invest because it's affordable. All right, a bit over an hour out of Melbourne for those that don't know, because trying to buy something under the $600,000 mark around Melbourne is virtually impossible, and that's typically where most investors would top out and not be able to spend over the $600,000 mark on a normal everyday investment property. It's where first home buyers drop out of the market completely as well, because that's where the first home buyer grants start to diminish or stop. So all the activity is under $600,000 for investing, except for NDIS, of course, because it's easier, like I said, to get a loan where you've got a lease for 20 years and you've got tenants that don't move, you've got participants that don't move out of the house. The bank knows the company that's giving you the lease and how big they are, how established they are. You know, it's just not some kid out of school, you know, in his first job, or, you know, moving in with his girlfriend to see how it goes, alrighty, or some young family with 3 kids running around and a dog, etc., and all succumbing to the cost of living pressures that we hear people unfortunately whinging about all day, every day these days, and it's the headline on every news broadcast that I see every evening. So all completely irrelevant to all those dramas. NDIS. So for a headache-free investment, try and find something better. Okay. Let's have a look. Just got to see it. All right. So when you're looking at that, now, as I said, this property is available too. So be quick, all righty. We can take expression of interest form when I've finished here. To reserve any of these things, the typical procedure is we need $2,500 to reserve it. That's, oh, there we go. That's fully refundable as well, should people not go ahead or their finance not get approved. And that just gives people a chance to ask all the questions, the proof as well that they need to feel comfortable and not miss out on the property. So that's what's happened with this one. Hasn't gone through thanks to people having an undisclosed loan of a couple of $100,000. So a little bit difficult to hide an extra loan of a couple of $100,000. So bad luck for them, good luck for us. The land's cheap. That's also why we get such a huge return. And if you looked at the percentage returns on this house, it's just over a 30% return. So once again, combine or compare that to anything else on the market, It's very, 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 very simple. Get through to completion. The bank is going to want to see around $200,000 to maybe $250,000. Alrighty, and that's the pick of the bunch. So I thought I'd start talking about what stock's available first, because a lot of people really do not care how NDIS works. We've met with a few of John's customers, and they don't really give a shit. They've got a lease. The finance will give them the money. It's the same as turning the engine on their Mercedes. Is it going to work? And are you going to be able to get from A to B and have a happy retirement? You are. That's all there is to it. So I thought I wouldn't bore them stupid with the history lesson, and we'll just give them some examples of what's available and how much and what the returns are. So, Rod, can you see this place here showing 169,000 income?
Yep.
All right. Well, that's in your neck of the woods, nearly.
Yep.
That's in South Australia.
Mm-hmm.
So this is entry-level property, which is just over the $700,000 mark, 736, and it's due to title about now. So it's ready to go about now. If you think it's not too much different to the average everyday investment property like we looked at before, it's actually closer to the capital city than Ballarat is closer to Melbourne, and we're actually getting just under $170,000 a year in gross income out of that property. The vacancy rates are 0 for this type of property. It's a robust design, which investors have not been building robust category properties up until 1st of July this year, when the government bumped the room rental rates up from about $40,000 a year to $80,000 a year. So the very well designed. We can have 2 people in it. They don't have to be of the same category at all. But, like the investor said, who really cares? We're getting over $3,000 a week. And a few people have thought that I've been really rude when I've answered their questions as who cares? But now I'm starting to hear that over and over again, because people have heard so much about NDIS. It's not new. They've got friends that are actually making the money now and buying multiple houses. So if we actually look at, one of the dream homes in Australia and best places in Australia to live, this is a $10 million house, or $9.7 million house, sitting on the beach in Queensland. And that would be the dream of a lot of people to retire or to holiday in that house. You can see the income, $171,000 a year, and it's going to cost you $9.7 million. Have all your clients and, have your friends go and invest in a $700,000, $800,000 NDIS property, giving you $170,000 a year. Or if you've got $9.7 million to spend, go and buy 10 of these instead and be living on $2.5 million a year. And then you can actually go and rent anywhere that you like to live at all. So the point of that waffle about the huge income that's coming in that you can then spend on lifestyle and rent is that we're not doing this because we like to play Monopoly. We're not doing this to, beat our friends. We're doing it to generate an income to do something useful with while we can still enjoy life. And that might be to pay off school fees is a huge motivator. A lot of us, it's to have a really good retirement, which this will provide. And this will see most people's retirement through to completion, considering this one comes with a 20-year lease. The one in Ballarat comes with a 30-year lease. So your retirement's all done. If you had another couple of $100,000 a year going into your mortgage, that's going to eliminate your mortgage in the foreseeable future, and that weight is going to be off your shoulders as well. So there's some really good reasons to be investing, spending a day doing some paperwork, signing some documents, reading some contracts. It'll take you about a day if you add every hour up after each other, and then you're on 250 grand a year. So your hourly rate will never be higher to get this organised. Alrighty, there's a fair bit of paper warfare is what I'm getting at, but obviously it's quite worthwhile. The finance, our mortgage brokers will work out what's required. And like we said before, if we're buying something, this is an example of a $900,000 property, we're going to need a bit over 200, 250 to get it through to completion. If we buy it in a company name, if we're buying it in our own names, then we're going to be up around the $150,000, $170,000 mark before money starts coming into your pocket. This can be worked out at the start. That's why we do that reservation, the expression of interest, $2,500. So we've got a chance to do all these calculations to make sure everything's going to run smoothly. Also wanted to have a look at what stock is available, just to make sure people hurry up, get off their backsides. So if we have a look at Tasmania, for example, enormous demand in Tasmania. We probably all know why, with so many two-headed people running around there. If you have a look at the stock list, there is not one that's available. As soon as things are released, off they go. We have another builder that has half a dozen, and they're not too far away from an asylum down there. So that's actually one of our best picks in Australia to be investing down in Tassie. They're $900,000 properties with the $250,000 income. And if we're having a look at the Victoria price list, we've got one property available in the western suburbs of Melbourne, over $1 million. We've got about 4 up in the north of Melbourne, all over 950,000. And if you've been paying attention over the last couple of years that we've been doing this, these $950,000 houses were selling for $750,000 before COVID. Then we go to the southeast, where there's an enormous demand around Melbourne metropolitan area, and pretty much everything is the $1 million mark in the southeastern suburbs of Melbourne these days. There's one available there, really good place to be investing. Last time we had one room become available, there were 15 people applied for it with finance. So we know there's huge demand. And there's a few being released in Geelong in the $900,000 mark that are available as well. To South Australia, we've got a few available there. We probably would not be buying high physical support out there because there's a few of them that have been built, but the robust category, there's an enormous demand. So we'd probably lean towards that. The one that I just showed you at $734,000 was just sold today. The next equivalent, exactly the same property, is $20,000 more.
Oh, you hadn't swiped, correct?
Swiped. Hey? Somebody talking to me? Or
Yeah.
is... What's the question, sorry? No. All right. So we see that. I'll flip off to the shortage of accommodation as well, just so we can get some independent facts and figures on that. So what is interesting about this map of Australia is the heading shows us total SDA, Specialist Disability Accommodation, funded participants. So funded means they've got the money, it's approved. It might have taken their plan manager up to 12 months to get their finance approved, and it's approved. And so they are just waiting for you investors to get off your backsides and build them a house where they want to live. Now, a lot of people are not going to pay their fund manager, or the NDIS provider is not going to be paying people to go and do all the administration and paperwork to get finance approval if there are no houses to build. This is also catch-22. So if you look at Northern Territory, there's 285 people that have actually got their finance approved, but there's only 50 places. So why would the vast majority of those people even bother to go through the expense, the time, the proof, the paperwork, try and fill in an NDIS application? It's the big whinge that people have about dealing with the government. Try and fill in an Australian immigration, holiday visa, whatever it is. It's 18 pages, but I'm sitting in Vietnam and I filled in 3 pages, and really, one page was just a picture of my happy smiling face. So, the paperwork that we have to go through in Australia to get anything done with the government is astronomical. And my point is that if there's 285 people that have gone through all that paperwork, there's probably another 2,000 that haven't even bothered because there are no places available anyway. All right, you're not going to be bothered to do all that if the places are not available. Remember before we said Tasmania is one of our favourite places to be investing? There's 10 people for every one room. Okay, go to Victoria, what's that? There's 5 people for every one room. Go to Canberra, there's 3 people for every one room. So Queensland, we've built a lot of houses in Queensland, but still 2 people for virtually every room that's available. And Western Australia, the land is cheap in Western Australia, so there's a fair bit of NDIS building going on in NDIS in Western Australia, but we're not very excited about Western Australia because there's a shortage of carers. There's no point building anything if you can't get a carer to get out of bed at 3 o'clock in the morning and wipe somebody's backside or attend to them. So, yeah, there's better places to be investing at the moment, thanks to all the other factors that we need to consider for NDIS. That's the answer to who cares, all right? There's all the proof. It's all independent. It's all on the government websites. We're getting an amazing bargain when we look at what we've been able to get together for our clients. Obviously, we've been doing it a few years. Lawrence, can you see the building costs up there on the screen?
Yes, I can, yes.
Right, so anything purple is basically directly from NDIS. So this year, after the 1st of July, we're really just doing 2-bedroom houses with on-site overnight assistance. So the government and all their experts in NDIS, and they actually are some of the smartest people in Australia, because you can go and have a look at the 5-yearly report that got done at the end of last financial year, and it gives you all their credentials, and they're quite impressive. So these smart people have worked out that it costs about $1.1 million just to build an NDIS house. In the document that they've created, they explain why it costs $1.1 million. And if we build the robust houses that we've mentioned before and that we're getting the $250,000 income from, it's showing that it's costing just under $1 million to make those houses indestructible. However, because of the volume that runs through our place, because, well, it's really volume, it's the limitations that we put on builders, and it's the ease of dealing with us, that we can be buying those houses for anywhere under $600,000 up to $700,000. The most expensive ones are in Bendigo. For some reason, $750,000. But even if we're buying in Bendigo at a $750,000 build, it's still $250,000 less than what the government tells us the cost to build that property is, and on which the rent that you're getting paid is based. So nobody's ever complained about the pricing. You can see it's very close to a normal everyday investment property anyway. It's cheaper than anything in New South Wales that you could buy for any sort of investment property and getting a 3% return or 2% return.
Joe, sorry for
yes.
interrupting. Can you give some clarity on that? I know you understand and I understand, but there's a few people there that might not understand what the difference is of obtaining the property for, say, 7 and getting reimbursed from the government at 1 million. Explain that, the benefit and how that works.
Yeah, so there's a couple of points there. One is to just prove to you that you're getting a bargain by dealing with us because of the volume that runs through our place and what we've organised with our builders. The second point is that the rent, you think that it's a high rent, okay? But that's really only because you're looking at a $600,000 building cost, all right? But the building cost is not really $600,000. If you added up what it should be and what the government expects it to be, the building cost is more like $1 million on average Australia-wide.
Including the land, Joe?
Not including land.
Not including, okay.
No. So the difference is going to be the land, which also goes to reinforce what a bargain it is, because we've just showed you half a dozen houses that are available for under $1 million that include, $300,000 worth of land in desirable Melbourne suburbs.
Can I ask a question? Can I ask a question? Hi, my name's Tony. How are you?
Yeah, good. Thanks, Tony.
Do you mind if I ask a quick question? Is that okay? I just jumped in because a friend of mine told me you guys were on. I'm a builder. I'm a licensed domestic and commercial builder. So I've been curious on how to get involved in this kind of stuff. I've been so busy with other stuff, so I've wrapped up a lot of my own work. So I'm looking into this. So just so I understand, so a robust house costs close to $1 million.
According to the government, yep.
According to the government, but as a builder, how does this work? So you engage me as a builder. You say, Tony, here's $1 million, build this. Is that how it works? Or do I actually have to invest $1 million to get the return, and you guys provide, I guess, the opportunity? How does that actually work? I'm just trying to understand it quickly without taking up too much time,
No, you're right. Good question, because everybody's got a friend that's a builder already, or their relative or something like that. So the question comes up all the time, if they've built their own house and they were really happy with the builder and they want to use them. So the first answer is bad luck, because the NDIS providers have their own builders that they will only deal with. One of the biggest NDIS providers will only deal with 2 builders because they're happy with their work. They know everything gets done. They know it's no fuss. They know they're not going broke, which has been a consideration over the last couple of years. And they don't care. They're only going to deal with 2 builders. The other issue that we have with the builders is that they get limited to 100 houses a year. So after 100 houses a year, they're not allowed to build any more houses, because the NDIS providers want to make sure, and they get a guarantee from the builder, that that house is going to be completed within 12 months. For the reasons that we discussed before about it can take up to 12 months for a participant's finance to be approved. So if the build takes more than 12 months, that participant's finance lapses, and then the plan manager or whoever's applying for finance has to go through that whole procedure again, which can take 12 months. So the NDIS providers that give us the lease, and this is still the answer to the first part of your question, if they're giving us a lease, they need guarantees that the house is going to be finished within 12 months. So they're very strict with the builders that they use. The second part of the question, and when we're building it, there's no stress on your part, because it's just a normal house and land package where once each stage is completed, you'll be getting paid by the bank as each stage is completed and it's certified by an NDIS certifier. If you had some spare money lying around, it would be a wonderful idea to build some NDIS houses, because once they're complete, they're worth probably twice as much or more as
that was my question. I'm involved with a couple of very influential, quiet, you wouldn't recognize that they're very successful people. And they're asking me, I guess, because they trust me to do, I wouldn't be able to do 100 homes. It's just too much. It's too much of a headache for me. But I think 12 homes, these people that I know have actually got the money to do it. But I just don't understand. I just need to work out how much is in it for everybody. Does that make sense? Because it's got to be worth it for all. I've got the investor who it's actually she. That's not, the money's not the issue. Me as the builder is how much am I going to make? Let's be honest.
All right. So the money's not the issue. The builder's not the issue. Alrighty. The issue is getting somebody to get out of bed at 3 o'clock in the morning and wipe somebody else's backside. All right.
Yeah.
So you would hopefully have picked that up from our story about WA, where we're not really excited and we're not recommending properties to our investors in WA. So we've also pointed out what areas are good areas to be investing in, but it's also pointless unless you're building what that NDIS provider wants, because that NDIS provider, every time we build a house, that might create 10 more jobs. So where are they going to get 10 more people to go and work in that house, which is also another one of our bottlenecks. And then those NDIS providers that are going to give us the lease before we start building, so it is a secure investment and just not a gamble, have got multiple houses. All those houses are exactly the same. The knives go in the same drawer, the medicines go in the same place, the carers sleep in exactly the same position in each house as well, because of the rules, regulations, whatever it is, procedures that they have to adhere to, and the staff that the participants that they're accommodating do not cope with change at all. So some of them have to be moved from house to house while we wait for their houses to be built, thanks to the shortage of accommodation.
Joe, from what you're saying, Joe, it seems that the NDIS has got a closed building market, so people like Tony can't enter the market.
They certainly can.
As a builder?
As a builder, they can have a go. But, we've got builders that have built 15 houses that are vacant, okay, and they'll never have a participant in them.
Because they're not tied in with the providers?
They're not tied in with the provider. Some houses were, whatever it was, 20 millimeters short on handles in their bathroom. Some thought, oh, shit, that's a good idea. Joe's building 6 houses in this suburb. I'll go and build some more. And they built 120 houses in that suburb. And now none of those people will have participants there. So there's no way for a builder to tell how many houses are being built in that area, and therefore is the demand already satisfied, because it's a moving target. So we've been doing it for 4 years, and 4 years ago we sort of had to look at all the government data and work out where there was the areas of greatest demand. But then I also had to get in my car and go and knock on the door of every single NDIS provider in town and say, look, if we build you a house, you know, get our builders, get our investors to build you a house. Will you give us a lease and you have the staff to actually look after these people? And then we even had to meet the staff to make sure they'd drive from one suburb to the new suburb next door, because a lot of these carers are from India, Philippines. They're not driving cars. They're not just driving around to every suburb. They're on public transport. Trying to do 24-hour care on public transport is another bottleneck. So you hear me whinging a bit about all the 100 factors that go into it, but it's a completely different investment to buying a normal everyday investment property.
So the carers is what I'm hearing is probably the most important part. There's no point in building a house if there's no carers to care for the disabled or the unfortunate.
It's
Right.
only one part of the puzzle, and there's a shortage of carers, all right, which is why we have migration, and we're working with migration agents. And one reason why I'm sitting in Vietnam as well, because I'm dealing with migration agents. We've got an office in India as well, which is directly opposite a nursing college to get more nurses to come as carers, because there's a shortage of carers as well. So there's lots of important parts in it, and it's a 180-degree different to a normal everyday investment property. We have sorted out all of those issues, and so when our investors are looking at where they're going to build, who the builder's going to be, what area, who's the NDIS provider, there's definitely a ranking of who's the safest, who's the biggest, who's the most comfortable that they feel.
So if I only want to do 6 a year, how does that rank me? I mean, like if I say, yeah, let's do it, I'll do it as a builder. I mean, as a business person, all I would want to know is, okay, if I'm going to build it for yourself or whoever, or for Lawrence or whoever, in the end, I just need to know what I'm actually going to make as a builder.
Yeah. So I would take that offline with you, and I'd work out, you know, what areas that you're most interested. Whereabouts are you based anyway, Tony?
I'm in Melbourne, right near the Melbourne airport.
Okay. All right. Northern suburb side of things. Yeah. So we just work out where the demand is. You know, what we do is we go to the NDIS providers that we like to deal with, that we know pay, that we know that have got the staff, and we know that have got the participants. All right. Because if my customers end up having a nice shiny new house built with no money coming in, they are going to be very, very unhappy. And I'm doing this for free. All right. I'm not charging any of these people on this call any money to deal with me and have all this packaged up, because I know that as soon as that house is finished, that they're in a position, well, after a couple of months of income comes in and the bank sees that they can refinance that house and buy another 2, and I'll get paid again by the builder, which is typically how we make our money as well. There are other marketing companies that charge anywhere from $15,000 to over $50,000 to put all the pieces of the puzzle together, because as I've been waffling on, it's definitely not a build and they will come. It doesn't work as a build and they will come at all. And there can be many reasons for that. One is the footpath out the front might have tree roots going on it. They can't get down to the shops. You're not going to get a wheelchair up and down. They're not going to move there. A new estate, trying to get land around Melbourne in new estates. There's no buses. There's no Coles supermarket close by to the land, etc., etc. So there's a huge list of things that we have to go through to work out where we should be buying, and if the NDIS providers will take that house as well.
Can I make a point, Joe? Can I make one point? When you mentioned the buses, the suburb that has the NDIS house built has to have a low floor bus go past. If it doesn't have a low floor bus go past its front door, it doesn't get anywhere. Yeah, it must have a low floor bus, even to that extent. So you won't get participants in a house if it doesn't have a low floor bus.
No, that's right. So there's lots of examples that just show that it's not as easy as, build and they will come like a normal investment property. But because of the demand, I sort of skipped on this demand side of things, which I'll just bring up again. If we have a look in Victoria, there's actually over 7,000 people waiting. Western suburbs is actually where there's the highest need.
Which is about 30 minutes from my place, basically.
Yeah, easy. So easy out there. And that's where the rents are expected to, location factors go up the most as well. So, your investor, the answer to a lot of their question might be, who cares? All right. As well, because they just want a really good return. So we know that there's a demand. We just need to get them a decent NDIS provider, and there's some awful NDIS providers as well. So, one of our NDIS providers has come to us and said, we've got a problem. In the next 2 years, we need to have 5,000 houses under management. At the moment, they've got 370 houses. So that's 4,500 houses that they need to get built. So the builders...
Good luck. Good luck.
Yeah,
Good
I know.
luck.
So we definitely need more builders. Okay. I know it was all sort of a negative answer to your question, but we definitely need to speak to you, and we need more builders. Okay.
Yeah.
And they'll give us the leases after we have a look at, how much money people can spend, because then they'll tell us where they need those houses built first. And if, we agree to build them and give them appropriate competitive quotes, well, actually, they don't care too much about the competitive quotes, but they also have a fund that will buy those houses as well. So people that were on the call a couple of weeks ago know that particular NDIS provider bought nearly 50 properties from us in one go, within about 5 minutes after I, showed them what we'd organised as well. So there's that much demand for it. So yeah, we'd definitely like to have a chat with you. Here, what I'll do is I'll run through the standard NDIS presentation. If I just flip over to that. Let's have a look. Any more questions while we're answering why we should be investing in NDIS? So I've sort of flipped the presentation around, because usually we explain it, but a lot of people know all about it. They just want to know how to get in, how much it's going to cost, can they do it, and what sort of examples are available. So I've already done that. We've got the examples in South Australia where the cost of the land is very low. The building cost is always about the same though. The house price is in that $600,000 mark. So that means the return there is about 23% with that sort of an income for that demand of person. But somebody with $130,000 available in their redraw can be investing in something like this. Also, every single house that we talk to you about can be put into your super fund too, and that would be an exceptionally good idea. If you had the money or were close to retirement age, or even 10 years away from retirement age, it would be well worth doing. It would be well worth even putting more money in a lot of cases into your super fund to be able to get this tax-free income once you hit 60 and not working full time.
And say for super fund stuff with Murray Bridge, for example, Joe, somebody who's got a couple of hundred, that would work for that.
Yeah, they're probably going to need about 250 to get something, maybe even 300 by the time you pay stamp duty into super. So when we look at the price of any of these properties, so this is 730, one in Ballarat's just over 800. By the time you get it into super, you've got to pay for the stamp duty on the land. You've got to pay all the holding costs while it's being built for 12 months, which is 12 months worth of interest on the land loan, and then the building stage payments, we're paying interest on those. You're also paying a fee to the finance provider who's going to provide the construction loan to get these things built. So you would add roughly $100,000 to the build price, maybe a little bit under, to get it through to completion through construction. Once the house is completed, then the super fund will come along, and the super fund will buy it from the third-party funder who's paid the builder to get this built for us. So that's roughly how it works.
Okay.
Once people have reserved the property, we'll give them the little spreadsheet, which will tell them exactly based on the estimated time to build, because the longer it's going to take to build, the more interest they're going to pay, the more fees they're going to have to pay as well.
And interest rates, what, 7% above?
Yeah, these days it's pretty much all over 7. It's not anymore for NDIS with most providers. I shouldn't say most providers, but with the provider of NDIS funding. So don't be surprised if it's very close to 8 these days.
Okay.
And then there's quite a few fees that we keep saying how much we need to get it through to completion, because this is a commercial loan and it's more like a commercial investment where the value of the property is based on the rent. And because the finance providers know how much money we're all making out of these NDIS properties, they actually do slug us with a lot more fees. So a valuation fee is anywhere from $3,000 to $4,500 because it's done on a commercial basis. We also have to get at each stage of the building, typically 5 stages, an SDA certifier has to go out there and measure down to the millimeter to make sure that the builder's done the job properly. So he typically can't just go and send out his apprentices and let them run loose on the, what might have been a typical first home buyer, investment property.
How do you manage 5,000 houses or 500,000 houses that you're saying when it's a millimeter perfect? That's like,
yeah.
I'm just trying to understand that. Like, it's pretty, isn't there? So the tolerance that they have, it sounds like it's not even based on the VBA tolerances and standards. They've got their own standards and tolerances. 3 mil that's like, you have to get on your hands and knees to see 3 mil.
We've had NDIS certifiers not certify a house because the architraves or the hallway, the architraves were 3 mil intruding into the hallway by 3 mils. Okay, and he wouldn't pass that house, and it took him a month to get it recertified. By the time they'd done the work, and he'd come out and checked it off, and his words were, "Not my problem." Okay. Customer owner, very unhappy. There's a month's worth of rent they didn't get. And, all the admin to get those people back as well. Like I said, shower handles, I think they were 2 centimeters too high as well. And so the shower, whatever some sort of shower screen system had to be redone.
Do you build a contingency in, given that these things do happen for your clients?
No contingency, and they shouldn't be happening, and they're just stories from other builders, not our builders.
So your builders, you don't have any issues like this?
Not really. No.
Okay.
Haven't had. Sorry?
And that's why it's a fixed price, isn't it, Joe?
Well, it's fixed price, yep. We're dealing with builders that know what they're doing. Remember, the NDIS providers are only dealing with the builders that they're happy with in most cases. So yeah, yep. That's the answer. And it's quite limited, like we said.
Sorry, Joe, a quick question. You might have glossed over this and I may have missed it. Fixed price that you've got there, is that including the land, or is the land price on top of that?
When we're looking at the brochures, that includes the land. If we're looking at...
So the nomination below where it says 232,500, that's built into the fixed price of the build?
Or in that total price, correct. The fixed price, yes.
Awesome.
Yes.
Okay.
Yep. Before, when we were talking about the government pricing, that's just the build price. Yeah. So it means that people know that they're getting a bargain when they're dealing with us. And number two, it also means that we don't have any issues with valuations. All right.
So how big would that house be at 939? 30 squares, 20 squares? It doesn't say. Like a house, 3-bedroom house. How
Yeah.
big house?
That's probably going to be 24, 25 squares, something like that.
So
Maybe a little bit less.
and that's the build price only. So say 940,000 divided by say 24 squares. So it's about $40,000 a square.
Yeah.
Whatever.
Twice the normal value.
Yeah.
It's almost,
So we're
it's
roughly
almost,
twice. It can be
yeah, it's
twice.
almost twice, yeah.
It can be twice. There's enormous amount of extra fixtures and fittings. Depending on, that's a robust house, so remember it has to be indestructible, cyclone proof, unburnable. The walls can't be kicked in, etc., etc.
So there'd be pretty heavy depreciation allowances.
Yes, which is good. But even with the huge depreciation, it's still way cash flow positive as well. So sort of good from that point of view. Yeah, pick up. Alrighty, I'm going to just flip through the presentation, which might touch on a few things and just reinforce what we've said as well, but I'll do it quickly because a lot of people would know about this these days. And this presentation, we did it way before COVID as well. And I haven't updated it because it just, number one, proves how right I was. A lot of the answers and things I've been talking about, everything can be documented. So nobody has to spend any money until their answers are in black and white. They can look at it, they can send it to lawyers, they can do whatever they like with it, but everything's documented, so you don't have to believe a word I say. It's documented on the NDIS website. The leases, we get a copy of the lease from the NDIS providers before we invest. Anything else that we need is there. The mortgage brokers are specialists. You have to use our mortgage brokers as well. You can't just go and use any of the big four banks or your best mate. Happy to even pay for you to speak to our accountants who'll give you a second opinion on what to do with an extra couple of $100,000 a year added to your income and what's the best ownership structure. Should it be family trust, unit trust, etc.? We don't use conveyancers. We use lawyers that also do conveyancing. So they're working for you because it's a bit more like a commercial loan as well. It's not just ticking a box and hoping everything's going to work out. There's a whole lot more added benefits that we've negotiated from standard leases for our clients. And anybody that's over 50, we would make them go and talk to a financial planner, whether they wanted to or not, because you're probably going to be able to put one of these things into superannuation as well. And it's a genius idea. For today's example, we had a customer buy a $650,000 property maybe 2 years ago. COVID meant nothing happened. It started to get built after COVID. Their financial circumstances were completely screwed during COVID, so they could not get a loan in their own names. So what we did is we got the superannuation funder to buy that property from them. And once that property is completed, the superannuation fund that they've now set up will buy it from them. And they paid $580 for it. The super fund bought it at $650. So they got some money back today, which they needed thanks to being screwed over by COVID. And the current valuation of that property before even being completed is over $800,000. So the super fund can then go and get an 80% loan of an $800,000 property. And that would mean 20% deposits, $160,000. So the they'll have a $640,000 loan against a property that they paid $650,000 for. So they'll actually get more money back into the super fund, and which is about another $150,000. So they've got their $150,000 back. They got the 70 extra that they got initially. So just by moving that property that's had a bit of capital growth into super fund, there's an extra $220,000 or so in their super fund, which is a deposit on another property.
And who gives them all that advice or that information?
I am not giving anybody any advice. I'm telling people what my genius other customers have done and what we've worked out, and then they've gone and spoken with their financial planner.
Right, so they can have this conversation because you've got your own mortgage specialist, your accountants and lawyers, but the financial planner can be part of the investors team.
Exactly, and so the financial planner will give the advice, and they're the ones that, should anything go wrong, are going to get sued.
Fair enough.
Okay, which is important. Okay. Yes. Because, you know, I'll come up with my genius ideas here and I'll do all the mathematics and the theory's fine. And whether it works or not is a question for people to wait 2 years to see. But that's exactly why I leave this presentation the same as what I had before COVID, because it proves to people that we've been right every single time. All our customers have made hundreds of thousands of dollars. People have bought $460,000 investment properties that are giving $240,000 a year in rent. So what I'm telling you here is not as good as actually what it's been turning out to be. And
well, a fair bit of that is because of the one-time greatest ever property boom that we've had over the last 2 to 3 years, isn't
it? Thank you, COVID. COVID has been fantastic for NDIS.
Joe, can I just say that we've been selling properties like this, well, not NDIS, but other properties for over 10 years, 12, going back to 2010, 2012, and even further. And everyone has made money based on our advice. Now, of buying. Now, technically speaking, Joe cannot give advice. A mortgage specialist cannot give advice. An accountant cannot give advice, and the lawyer cannot give advice. The only legal person who can is a financial planner. Is an official registered financial planner. Exactly.
For superannuation.
Right. So, exactly, for super, exactly. So they are the only ones that can do it in this instance. But
and the financial planner cannot sell property.
That's right. Yeah, they can't answer a property question. Correct. Yeah.
Exactly right. So if people listen to us, they would be millionaires based on what we told them nearly 20 years ago that we've been doing this.
Yeah, well, they have been, and there's certainly plenty of people. Yeah. So there's a couple of questions in chat. Feel free to put them in chat if you like as well. So yeah, that's why we were saying that the cost to get it into super might be $100,000 more, because yes, you are paying stamp duty twice. You're buying the land, so you're paying the stamp duty on the land, and then when the property is completed, you're paying stamp duty on the completed property as well to get it into super. Now, people think, oh, well, that's awful because I've just paid an extra $30,000 or $50,000 stamp duty on a completed property, but it's still more than worthwhile when you consider what your super funds have been doing over the last year, over the last 10 years, over the last 20 years. They've gone sideways. The Australian share market's been around 7,000 points, God knows, for the last, I don't know if it's 20 years, but at least 10 years. It's effectively gone sideways, and there's no leverage. So if you had $250,000 in super, you can come and buy an NDIS property from us. We know that it's going to go up in value, which I will show you in 1 minute, why it's going to double in value in 1 year. This year your super fund's probably going to lose money, even if it went up. Even if it went up 20%, which is better than the best year in super, you've still made $50,000 out of your $250. Alrighty, but if we buy one of these NDIS properties, what are your dividends in super? Let's say you make, the 20% return, which takes into account dividends and capital growth. Okay. But your dividends / your rent in the investment property is minimum of 170 less the costs, let's say $150,000 return, and you've only spent 250. So there's 60% return on your money, not even taking into account capital growth. So when we look at the capital growth that we expect out of these properties, I'm going to share a little spreadsheet because this is what's been happening to our clients that took the leap of faith before COVID, and they're now refinancing those properties and buying more. So if I just, can you guys see the spreadsheet at the moment?
Yeah.
Yeah,
Right.
can you zoom it up a bit, Joe?
Maybe. Let's have a look. Maybe not.
Go
I
down to
probably
the
won't.
bottom right-hand corner. The bottom right-hand corner, you can zoom the page just a little bit, see what happens.
Oh, okay. Maybe people should not be on their phone. Let's have a look. All right.
That's better.
All right.
Back a bit.
Yeah. All right. Good.
Perfect.
All right. Well done. I learned something today. All right. So if we just have a look at the cheapest house that we can get, which was about $750,000 in South Australia, the income was $169,000, close enough. Remember, these are commercial investments, so a cap rate of 10% is very low cap rate. That would value that property on a commercial basis, because a commercial property is valued on its rent purely. And even if the bank only gave us a 60% lend, we could redraw $1 million, more than $1 million against that property. So we've actually got $170,000 to go and buy another one of these properties. And that's why I was telling you, I don't need to charge you money to package all this up for you, because next year you're going to come along and you're going to buy another property from us. And in case you haven't worked out, Lawrence is one of our salespeople. I'd correct you, Lawrence, we've been doing this for 20 years. And the people time flies, I know. And people have made millions of dollars. So we've been through NRAS. We've been through, all the different property booms. And this is just the latest property boom, which is not going to last forever, because there's a limit of how many participants there are. Okay. There's no limit on funding. There's a limit on how many carers can look after them. There's a limit on locations as well. If there's a demand for 20 people in one particular suburb, once that's built, that's it. There's a limit on tradespeople. There's a limit on builders. So very limited. All right. So that little $750,000 property is really worth 1.7. But we've actually got funders. If that property is, or this one is in outside the metropolitan area, so the funder gives us an 8% cap rate that values that property at over $2 million. Now, any lender is going to give you a 60% lend against a commercial property. So, we can redraw up to 1.2. We've got enough money back in our pocket to pay the kids' school fees for their whole secondary school. We've got enough money to pay off our mortgage in the vast majority of cases. We've got enough money to buy a brand new Land Cruiser and a beaten up secondhand old Ferrari. Okay. And it cost us nothing to do that. We've refinanced against a normal property. This one's completed. We go to the finance company with a 20-year lease with money going into our bank. Very, very, very straightforward.
So this 20-year
taking-
lease, sorry, this is given to you. So I had a BP service station. So we had a 35-year lease. So banks would obviously lend you money based on the income, right?
Yeah.
So that's similar to what you're saying here, correct? Because we had it with Woolworths. So Woolworths
Yeah.
obviously are a blue chip tenant. So
Definitely.
so if I invested 750 grand with yourself, right, you're saying the income is around about 170 grand, but the commercial value is 1.7. So you're saying then I can then redraw 1,020,000.
That's the mathematics. Correct.
I'm just trying to understand that. So I know it's based on the valuation. So 750,000, the redraw is 1,020,000 with an investment of 750 grand. It almost
looking at it wrong.
sounds like a no-brainer.
It's right.
Almost sounds like a no-brainer.
Well, people are already doing it. Okay. So we've had people buy one, refinance, buy another 3. Off they go again. So for you to get, me and Lawrence used to run around telling everybody, buy 10 properties in 10 years, you'll never have to work again. All right. Buy 4 of these in 4 years and you'll, God knows, none of your family will ever have to work again either. It's just mathematics. If you would understand it, Woolworths is a blue chip tenant, McDonald's is a blue chip tenant, Coles, Myer, those sort of guys, in a lot of cases, that's a 5% cap rate. Okay. That would value that property at over $3 million. So when the finance companies see who the leases are with, how long they've been around and who are running them, we're getting better than that cap rate.
If they break the lease for whatever reason, how does that, like, let's say, some provider or whoever breaks the lease, so is it covered for the next 8 years if it's a 10-year lease, for example? Who covers that?
2 parts to that. The number one, I don't think an SDA provider, which is the organization that's actually going to give you the lease, has ever broken one. It's sort of money for jam. They do take 15% of the income of the rent that the house generates to manage that house for you. So yeah, there's significant money in it for them. The second thing is, if they did, then because of the demand and the waiting list, there's any number of other SDA companies that will take over that lease from you. And an SDA provider can be sitting in Vietnam and he can be managing houses in Broken Hill. So there's no location constriction on that person that gives you the lease at all. We need then an NDIS or a SIL, supported independent living provider. They're the ones that actually look after the participants living in the house. So they need to be geographically close to the house. But we're only ever investing in areas where we know there's a demand. We know there's multiple SIL and NDIS providers that are working with us as well. So somebody else will take that over, no problem at all.
Sorry to interrupt.
Someone just asked me about the cap rate commercial. Can you just explain to them how that works again?
Yeah. All right. So if we had Woolworths as the tenant, then a lot of investors would be happy to receive a 5% return on their money because they know that Woolworths is always going to pay the bill and it's never going to go broke. So therefore, the cap rate might only be 5%. Like in some areas, McDonald's, if you invest in a McDonald's, you might only get a 3% return on your money. Now that was
who sets the cap rate, Joe?
Nobody sets the cap rate. It's just how much a investor is willing to pay for the property. So if an investor is buying a warehouse in Doveton, then that's not as secure as the McDonald's site in Swanson Street in Melbourne. So they might want a 10% return on their money if they're investing in Doveton, depending on who's running that business, you know, because if it's a warehouse in Doveton, it's some small business, so, you know, which are going broke. 95% of them are broke within 5 years, and so that's why you typically get a higher rental return from commercial, because it's a lot more risky than a normal residential investment. You know, 95% of businesses do not exist after 5 years. So you're pretty much guaranteed the business that you're renting to is going to go broke or move or shut down or whatever it might be. So therefore, that's why we're getting a higher rate in commercial for commercial investments. Obviously, we value this as a commercial investment, and the funders, the commercial funders that we deal with, have set. So they have set, in these cases, they said that they will buy and they will finance 8% if it's outside the metro area and 7% if it's inside the metro area of any property that we build that is one of our standard properties, you know, with the leases with it. So, but if you're going to go and buy a McDonald's as your commercial investment or as a 7-Eleven, then a lot of people want to buy those, and so they're willing to pay more and more money. So they might drive that cap rate down to 5.5%, and to get $170,000 worth of income, they might be paying over $3 million for that. So the commercial investment, it's only valued by the rent that the property generates.
Yeah, similar to what that's right. That's correct.
Exactly. Yeah. So if we can increase the rent on the tenant, then we can increase the value of the property, and next year we can maybe refinance a little bit of money out of it. So everybody that's bought normal everyday investment property in Australia is expecting that property to double in 10 years. And when we've been buying investment property, it's been doubling in 7 years or less for everything that me and Lawrence have been involved in. These things completely different. We've paid $750,000 for it. Once it's completed and the income's coming in, it's worth 1.7. But the year after that, it's not going to double again. It's only going to go up by how much the rent goes up. And the rent with NDIS goes up based on inflation. So it'll go up 3%, 5%, 7%, whatever inflation's going to be. So we are not expecting these properties to double in 10 years like a normal everyday investment property. We're expecting them to double in 1 year. All right. And that's when we refinance our money, and that's when we buy another one. Instead of waiting around for years for the equity to build, we've got the cash flow, we've got the lease, we've got the extra equity. We buy another one as soon as we possibly can, and we do it again.
And then the properties you're retaining are only going up at inflation.
Correct. Yeah. So we're getting all our capital growth in the first year. It's not spread out over the next 10 years, 20 years life of the property.
Mm-hmm. So really what the investors are buying is the income pretty much. That's
how it started out. Correct. Yep.
They don't really care about the bricks and mortar.
I missed that last bit, sorry.
I'm saying they don't really care about the bricks and mortar. What they care about is the income. I mean, if someone can invest 750 grand with a house and land package and get a return of 170,000, and then because you've got a lease for 170,000, an investor's going to pay 1.7 because, you know.
Exactly. Yeah.
So
nice and safe.
So let's say, for example, just so I understand it correctly, and correct me if I'm wrong. So if I spent 750 grand with you guys, we had a lease in place for 170 grand, then we market that out to an investor who will then pay $1.7 million for that $750,000 property, which means I get $1 million back, pay all the fees and whatever's, and then you've got enough to almost pay off your mortgage or buy another one. Is that correct?
That's 100% correct, and that's the second answer to your question, neatly summed up. All right. So yes, you can build houses already,
I'd rather
And-
not at that rate. I wouldn't want to be the builder. Why would you want to be the builder?
Yeah. All right. But that's right. So there are super funds that are, and like we said before, we've got to pay that intermediate finance company $100,000 extra to get these things built. So if your investors have got the money to get these things built, once they're built, then the super funds can come along and buy these things. All right. So we have small super funds, large super funds, Macquarie Bank people, for example, that will buy any of these things that we can get completed. And that's why I said I'd talk to you offline, because
Yeah. I'd
they,
like that. I'd like that. Yeah.
And
yeah,
are we talking OCP, Joe, for the intermediary there?
ATP, what's that? Sorry?
OCP.
Other people's money.
No, one contract property.
Yeah. Yep.
Okay.
Yep. So they
Okay.
charge $10,000 fee
Yep.
to arrange everything. All right.
Yep.
Which is a bargain to get something into your super fund.
Sure.
All right. Absolute bargain. And it's worth it every day of the week to get it in there. If
Just
you've
a
got
quick question. You've stated that there are limitations. There's limitations on builders, locations, all sorts of things. And obviously you're generating, and what I read from this, there's a strong demand for this product from an investor base. When are you going to run out of supply?
Yeah, good question. Like, it depends on what the builders do. All right. So remember that we went to one particular suburb and decided we could build probably just under 20 houses. So we built 6 in the first year, which would mean that the market wasn't flooded. If we'd made a mistake, we'd still have 100% occupancy, and then we could do it again next year. But somebody else, that we explained it all to, thought, oh shit, that's such a good idea. I'll get my own investors, and they built 120. So that particular area is just destroyed, and there's no demand. All right, 100 of those houses are never going to have a person with a disability in that house, and they're never going to get NDIS income. So it definitely depends on the area, but you can't just go to the local council and say how many NDIS houses are being built here. Alrighty. So there's ways for us to work out what the demand is and what's happening in an area, and that factors in where we need to be building and which ones are the highest priority as well. So yeah, there's a whole lot of limitations and a whole lot of work that goes on behind the scenes to just make sure that it's a successful investment.
So I can see it's a successful investment, fairly obvious. But what you're alluding to is that there's going to be limited stock, isn't it?
Yeah, correct. There's definitely limited stock, and it's really a lot of it's just really to do with the builders and the labor. I got a 25-year-old son who's a plumber who makes more money many weeks than his older brother, who's an emergency department doctor, saving people's lives. One of them sticks toilets and air conditioners in, and the other one saves people's lives and gets paid less. So yeah, the big shortage on the building side of things and decent tradespeople. That's sort of changed a little bit. It's opened up a whole lot. A lot of normal everyday houses are not getting built anymore. Normal investment properties not getting built like we mentioned before, but plenty of as many NDIS as we can get finance for are definitely getting built. That's right. Yeah, so we've got to get off our backside soon. And you saw the example in South Australia. What was sold today for 736, the replacement in the block next door is $750-something thousand. So it's $20,000 more in a day. And I also mentioned before COVID, people bought a house for $460,000. Their rent is $240,000. That house, even before it was rented, valued at $750,000. As a normal house, not taking into account the rent. So yeah. All right. Any more questions? Because I will wrap it up.
How do I get a hold of you after like you're in Vietnam now, are you?
Yeah, but I'm just working normal hours. I'm available on the phone. You can email me as well. And
Are you able to read out your email to me, and I'll just
yeah,
send it.
it's Joe, Joe, at capitalinvestmentideas.com.au.
Capital Investment
Yep, ideas.com.au.
Ideas, yeah.
And whoever told you that this was on, you can get in contact with them and they'll know how to contact me as well.
Definitely. So it's Joe at Capital CAPITAL Investment Ideas.com.au. So now investment ideas, yeah?
Correct, 100%. Yep, so give that a go.
Yeah.
Alrighty. And your investors, if they got plenty of money, they can be building these sort of things for our other investors, to buy, once they're completed.
I've got I've got two investors at the moment who are good friends of mine. Who one's a doctor in Dubai, and and he's looking for me to find him properties. So
okay,
what I need is I need someone to just keep it like yourself. Just keep it very simple. You invest this, you get this. They're going to ask questions like I am. Okay, well that's great. $170,000. Who pays that? It's SDA, like you said. Is it guaranteed? It's not hard getting investors in my case, because I have a few people that I've been blessed with being associated with. But if I can demonstrate to them that there's money involved, then
That's right. Right, now that's actually another point that you've raised. We have an AFSL licensed fund, and that can accept money from all around the world. So Devang is sitting here on the call as well, and he's just across the road from Dubai, in our office in India. And we've set that up because there's a lot of money that wants to come out of those places that have had their property boom. They've made some money. They're probably starting to lose money these days, or in recent times.
Yep.
And everybody knows Australia's probably the safest place in the world to invest. And then, of course, NDIS has come along, and that's why I'm sitting in Vietnam as well. They want to get their money away from their communist government, who can just take it at any time. Their property prices are down about 40% on what they've been investing in, as well. So the money's got to come out. But where do you put it, because in the past, you've actually had to have a friend that you can trust. You've had to have a relative that lives in Australia, and all the dangers associated with giving, your relatives, your brother, your kids, a couple $100,000 or a couple of $1 million to invest, just a nightmare. So we've solved that problem with AFSL licensed funds, which means there's a licensed fund manager who accounts for every single dollar. You don't have to trust me, your friends, your kids. All the money is properly accounted for, looked after, and the fund manager is actually paying the build invoices as the things get built, as well. So we can also, get their money safely into the country without any risk at all.
Yeah.
All right. I've got to wrap up, guys. Any other questions, you can just email me, ring me tomorrow. So I'm running off to an appointment here as well. Alrighty.
Very good. Thank you, Joe.
Thanks, Joe. Thank you.
Yeah.
Thank
Good
you.
to see you all.
Thanks, Joe.
Yeah, thanks for coming. All right, ciao.
Thanks, Joe. Okay.
See ya.
Thanks, guys.